Hi, this is Michael Rony Mullick, and you're watching the Week Ahead Show. And let us discuss what happened in the previous week, the major highlights, and also we will be coming to what we can expect in the coming week. So, as you know, from Monday was a holiday definitely, but from Tuesday markets were opened with a good gap up, and it continued to trade in the green. But then Friday, the massive fall off came right around 11 o'clock because at that time we had the data from Germany. So what is the data? Let us look into the data and see. So the economic data was Germany producer price inflation data for the month of July. And what happened is you can see it was in a downward trend from 0.6% month on month. It shot up to 5.3%. And such a high inflation rate is attributed to the high energy prices that is being in the European market because of the Russia conflict that is still going on. So that is why the markets fell. In the Indian market, there was a huge profit booking, and if you can see the magnitude of the fall, and this is a Nifty. You can see the last 3 days gain was all wiped out in a single day. In a Nifty as well as Bank Nifty was from days high to days low, it was close to 900 points move in Bank Nifty. So that was the markets have been falling dramatically in Indian markets and also the other markets as well. But Indian markets have been doing pretty well, and it is okay to have some profit booking because a one-way rally is definitely not a healthy sign for the markets. And if you look at the weekly charts, so Nifty after four consecutive sessions of after 4 consecutive weeks of trading in the green, finally it ended in the red, and it looks like an inverted hammer candle. That is a bearish signal. So we have to see if next week there's a red candle like this over here, so that will indicate a evening star pattern, and the markets can fall even further from there. So we have to see how the markets react. So on a weekly basis, it is looking as a short-term correction in the market, and again, like I said, it is fine to have a correction in the short term because the markets cannot go up in a one-way rally, and that is definitely not good for the markets. So that is how things are looking right now. And apart from that, data wise, if you want to see that FIIs have continued to buy in the markets for again last 2 weeks continuously. So they have bought for around 3,200 crores, and domestic institutional investors have been sellers, and they have sold for close to 1,800 crores in the last week. Apart from that, we had data coming in from the European GDP data that came at 3.9%. UK inflation data came at 40-year high of around 10.1% once again. And overall, next week also some important data are going to be announced. So on Friday, what we can see is that in the US, the markets did not end in the positive. Actually, it ended negatively, significantly in the bearish zone. So Nasdaq, it was Nasdaq which fell significantly, almost 2% down. Let me open up the daily charts, and you can see that Nasdaq opened with a gap down. It continued to move down. So Nasdaq looking very, very weak. That can signal bearishness for the IT stocks in our markets for the next week. S&P 500 also fell by 1.3%, and Dow Jones fell by 0.86%. And if you look at SGX Nifty, we can see already it is showing a 100 points gap down opening. So let us see where the markets open tomorrow morning, because if the magnitude of gap down is huge, then it can indicate further sell off in the market. So we have to wait and see how things are looking overall. Apart from that, if we look at the other things like the VIX in US shot up by 6%. Now it is at 20.5. India VIX also shot up by close to 6%, by 5.4%. It is at 18.2. Crude oil prices remain stable at around $89-90 per barrel, and it is dollar index which was showing bearishness. I mean, if dollar index rises, that is bearishness in the equity markets, and dollar index has been continuously rising for the entire last week, and it is very, very close to its all-time high. All-time high is, I think, around 109. It is already at 108.10. So that is definitely a negative sign for the markets. So dollar index should come down for the equity markets to recover. Otherwise, if the dollar index shoots up above its all-time high, we can expect further bearishness in the markets. Now coming to the next week, the open interest data shows extremely bearishness in the market. Put call ratio at 0.69, huge open interest at 18,000 and 17,900. So these levels will be very difficult for the markets to cross on the upside. On the downside, people are expecting 17,500 or 17,000 in the next expiry. So people are keeping a wide range on the downside and expecting the markets to fall. And 17,300 interestingly added good amount of put OI. So 17,300 is what people are betting on, nothing above that. So things look bearish for the next week from the point of view of open interest. In case of Bank Nifty, put call ratio is at 0.64. Again, bearishness is getting indicated in Bank Nifty as well. Huge amounts of call has been written from 39,500 and above. So 39,500 is going to be acting as a very, very important level of resistance for Bank Nifty. On the downside, it looks like people are taking a conservative role. 38,000 is where the put interest on the downside lies. So OI is at 38,000. So 38,000 to 39,500. This is the range people are expecting for the next week. And the next week, we know it is the expiry week. So monthly expiry is going to be definitely volatile for the markets. So we have to see how the things pan out over there. And from economic point of view, we have some data that is going to be released next week. Tuesday, very important. We have multiple data to be announced on Tuesday. So Tuesday, one of them, all of them are the PMI data, Purchase Managers Index of Services and Manufacturing. So Germany, UK as well as US, they will be coming out with their PMI data on Tuesday. That can be looked into. Apart from that, Thursday, very, very important. It is the US GDP data, which is going to be announced. And if you look at it, last time it came at negative 1.6%, and this time people are again expecting a negative 0.8% decline in GDP growth rate. So that is going to act as a major, if it comes even worse than that, obviously a major bearish sign for the markets in the short term. And apart from that, we have the Jackson Hole Economic Symposium conducted in the US for a period of from 25th August to 27th August. So it is where eminent speakers, economists, and also the Fed chairman will be speaking related to the economic outlook in the US, related to the interest rate, related to the inflation. So all of those will be discussed there. So definitely that is to be watched out for. Any important comments from there, I will be discussing in my videos as well. So these are the things we can watch out for the next week. And on a price action basis, if you want to see the candles, what we can expect on the downside. On the downside, definitely the levels to look out is for 17,600 and below closing, go bearish for the short term. There is no looking back for the markets if that happens. And so on the downside, there are multiple levels to watch out for, since the market has wiped out significant gains in the last just one day. So 17,635 is the first level, then 17,450, and finally 17,220 is what I'll be watching out for on the downside in case Nifty breaks down. And on the upside, on Friday's high is definitely going to be important. If this is being crossed, then we can expect the markets to be bullish, and next logical resistance should come around 18,090 to 18,100, but the chances of that happening is very, very minimum. Things are looking bearish, but tomorrow, if the market consolidates and does not break Friday's low, then we can expect the markets to consolidate and even maybe go higher in the coming week. So let us see what happens. Chances are, I said again, on the bearish side, the movements are possible. In case of Bank Nifty, if this level is broken, 38,600 is broken, you can see there's a gap pending. So there can be gap filling happening in the markets. Then 38,300 to 38,000 is going to act as a major support. So 38,000 should act as an important support in the coming week for Bank Nifty, and on the upside, 40,000 is what you should be looking out in case of Bank Nifty. So 40,000 on the upside, 38,000 on the downside are the levels to watch out for. It's a wide range because markets are likely to remain volatile. Like I told you, it is the monthly expiry, and monthly expiry definitely is usually a very, very volatile week. So With that, I think we have covered most of the points. Now let us wait to see how the Asian markets open tomorrow. If it is opening with a gap down, or if there's a negative sign, then we can expect the markets to open even lower, and that can induce more panic in the market. So tomorrow's trade is going to be important because that will decide the trend for the upcoming week. So all those will be discussed tomorrow morning's pre-market show. Until that time, thank you for watching and have a good night.